Hey everyone, welcome back to Corporate Decoder. Today, 10 Holdings XHLD just filed an 8K announcing a registered direct offering, and I am seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is raising a significant amount of money, but the way they are doing it raises some eyebrows. Alright, so we're looking at a report from 10 Holdings, Incorporated, filed on the 26th of June 2026. This is an 8K filing, which basically means something important and immediate happened with the company that investors need to know about. The big news here is about a deal they struck on the 26th of June, 10 Holdings, as they're calling themselves here. We'll also call them 10 Holdings or the company, signed something called a placement agency agreement. Think of this as an agreement with an investment bank, in this case Westpark Capital Incorporated, to help them sell their stock. What they're selling is 7.5 million shares of their common stock. This is a pretty big chunk of shares, and it is being done through what is called a registered direct offering. This means they're selling these shares directly to the placement agent, who will then presumably sell them to investors. The fundraising target here is around $7.5 million before fees. They expect this deal to wrap up by the 30th of June, just a few days after this filing. Now, why is this important? Raising money is usually a good thing, especially for smaller companies. But the way it is structured, and looking at the context, this particular type of offering can be a bit of a concern. We see from the news that this offering is indeed priced. This announcement comes hot on the heels of a press release, also dated the 26th of June, revealing the pricing of this $7.5 million offering. This part of the filing is essentially a heads up that they've released a press release about this offering. It is being furnished here as Exhibit 99.1. This is pretty standard stuff where companies make public announcements and then file them with the SEC. The press release itself, which is an exhibit to this filing, confirms the details of the offering. It states the number of shares and the intended gross proceeds. This is the official announcement to the market. Now let's talk about the stock itself. 10 Holdings has its common stock trading on the Nasdaq Stock Market LLC under the ticker symbol XHLD. Something notable here is that 10 Holdings is identifying itself as an emerging growth company. Companies in this category get to benefit from certain relaxed regulatory requirements. Like most filings, this includes a section on forward-looking statements. This is a legal disclaimer telling investors that statements about the future are just that predictions based on current information and assumptions. They are subject to risks and uncertainties, and the company isn't guaranteeing anything will actually happen as predicted. They mention that actual results could differ materially from these forward-looking statements due to various risks, including those detailed in their other SEC filings. This section just lists the exhibits that are part of this filing. The key one here is Exhibit 99.1, the press release we just mentioned about the pricing of the offering, and finally the signatures. This report is signed by Virgilio D. Torres, who holds the dual roles of Chief Executive Officer and Chief Financial Officer of 10 Holdings, Incorporated. This confirms the company is officially documenting these events. So let's zoom out and look at the bigger picture. 10 Holdings Incorporated, trading as XLD, is a communication services company, specifically in broadcasting. Their market cap is quite small, around $6 million, with the stock currently trading around $1.26, though it has seen a wide range this past year from about $1 to over $13. They have a small employee count of just 25. The company recently announced this $7.5 million offering. Looking at external context, this isn't the first time 10 Holdings has been in the news for fundraising. There was a mention of a reverse stock split back in November 2025, which often happens when a company's stock price has fallen significantly and they want to appear more substantial to exchanges or investors. A reverse split essentially reduces the number of outstanding shares, proportionally increasing the price per share. For example, a 1-for-10 reverse split means every 10 old shares become 1 new share. Now, about that red flag I mentioned, when a company, especially one with a small market cap like 10 Holdings, announces a registered direct offering that is essentially selling a large number of shares directly to an underwriter, it can signal a few things. Often it means the company is in urgent need of cash. While they did announce a price, the structure of these deals can sometimes lead to further downward pressure on the stock price. Right after the offering closes, it is like flooding the market with new shares. Historically, companies that rely heavily on these types of dilutive offerings can struggle to maintain or increase their stock value. Think about situations where a company might do multiple smaller offerings, or even a reverse split followed by more offerings. It can become a pattern. We see that they've had news about pricing an offering, and this 8 K filing confirms the agreement. The key concern for investors in these situations is dilution. If the company sells a large number of new shares, the ownership stake of existing shareholders gets smaller. For instance, if you owned 1% of the company before the offering and they issued 25% more shares, your ownership would drop to about 0.75%. While $7.5 million is a significant amount for a company of this size, it is crucial to understand how this capital will be used and what the long-term impact will be on shareholder value. Without more detail on the use of proceeds, it is hard to say for sure if this is a strategic move to fund growth or just a way to stay afloat. The risk I am watching is whether this offering is the first of many, and if it will truly fuel growth or just provide a short-term cash infusion that leads to further dilution. What I'm actually looking for is clarity on how this new capital will translate into revenue growth and profitability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.